People who talk about their goals, the business they're going to build, the money they're going to make, the version of themselves they're becoming, most of them never actually get there. And it's not because they lacked intelligence. It's not because opportunities didn't exist. It's because the moment they said it out loud, something inside them relaxed. The brain registered it as already done. The ambition leaked out through their words before the work ever began. You felt this. You told someone your plan, they nodded, maybe they smiled, and then, quietly, you moved a little slower toward it. That's not weakness, that's psychology. And once you understand it, you stop fighting yourself and you start operating differently. The people you admire most for what they've built, most of them got there quietly, not recklessly, not in isolation, but deliberately, with discipline, in silence. If that resonates with you, if you're someone who's done talking and ready to actually build, subscribe. This channel is for serious people working on serious things. No hype, no performance, just the architecture of real wealth spoken plainly. Now, let's begin. There is a reason the most dangerous chess players don't reveal their strategy mid-game. When you announce a goal, your brain experiences something close to the satisfaction of achieving it. Studies in social psychology have confirmed this. The social recognition itself becomes a reward, and your motivation to actually execute quietly drops. You got the dopamine hit for free. The announcement became a substitute for the result. But there's something even more damaging that most people don't talk about: other people's reactions. When you share your plans with someone who has doubts about their own life, they will, without meaning to, project those doubts onto yours. They'll ask questions designed to introduce uncertainty. They'll bring up risks you hadn't considered, not to help you, but because your certainty makes them uncomfortable. And if you're not mentally fortified, you'll absorb that. You'll second guess. You'll delay. Think about the last time you told someone something you were genuinely excited about, and they deflated it with a single sentence. That's risky, or, I don't know, sounds complicated. You didn't need their opinion, but now it lives in your head. Silence isn't secretiveness. Silence is armor. When you keep your wealth-building moves private, you protect your focus. You protect your identity. You're not negotiating your vision with people who didn't earn a seat at that table. You build. You let the results speak when the time is right. The person building quietly in the background is almost always more dangerous than the one performing their ambition for an audience. Most people don't know where they're going financially because they've never actually defined it. They say they want to be comfortable. They want to stop worrying about money. These are feelings, not targets, and you can't navigate toward a feeling. Here is what you actually need to know: 4 specific numbers that change how you operate. The first is your emergency fund target. This is 3 to 6 months of your essential expenses sitting in a liquid account that you don't touch, not invested, not tied up, available. This number gives you the ability to make decisions from a position of stability rather than desperation. When you have this, you stop making choices out of fear. The second is your desired monthly income. Not your current income, your target income. The number that, if it hit your account every month, would allow you to live the way you genuinely want to live. Most people have never calculated this. They feel vaguely unsatisfied but can't explain why. Write this number down. The third is your freedom number. This is the total amount of invested assets that, at a standard withdrawal rate of around 4% annually, would replace your desired monthly income without you trading time for it. For example, if you need $4,000 a month, your freedom number is roughly $1.2 million. That number is not abstract. It is a destination on a map. You can move toward it. The fourth is your investment target for this year, not lifetime, this year. A concrete amount you commit to directing toward wealth-building vehicles. When you know this number, every financial decision you make gets filtered through it. Vagueness keeps people poor, not lack of opportunity. Vagueness. Define your numbers. Everything else becomes cleaner. Wealth is not built by doing one thing well. It's built by deploying the right tools in the right sequence. Think of it this way. Every financial instrument you use is a weapon in an arsenal. And a serious strategist doesn't just carry one weapon, but they also don't carry 20 things they don't know how to use. They master a few, understand their range, and deploy them intentionally. The first category is equity, stocks. This is ownership in companies. When a company grows, your stake grows with it. The simplest way to participate in this is through index funds and ETFs, which spread your investment across hundreds or thousands of companies at once. You're not betting on one horse, you're betting on the race. Historically, over long periods, this has been one of the most reliable ways to build wealth. You don't need to pick stocks. You need to be consistent, patient, and appropriately invested. The second is real estate. What makes real estate uniquely powerful is leverage, the ability to control a large asset with a relatively small amount of your own capital. A concept worth understanding early is house hacking, buying a property, living in part of it, and renting the rest to offset or eliminate your housing costs. You build equity, you gain operational experience, and you do it with the most favorable loan terms available because you're an owner-occupant. The third is business ownership or skill-based income. This is the highest leverage category of all. A business that solves a real problem, run well, can generate income that compounds beyond what any passive investment can match, especially in the early years when you're still building your initial capital base. Risk exists in all of these. That is not a reason to avoid them. It's a reason to understand them. The person who never invests is also making a choice, and it carries its own risk. Inflation quietly destroys the purchasing power of money that never works. Know your weapons. Deploy them deliberately. Start with the ones closest to your current knowledge and expand from there. There is something that happens when you begin tracking your financial life with precision. You change. Not because tracking is magic, but because what you measure you take seriously. And when you take something seriously, your behavior around it shifts, often without you consciously forcing it. Build yourself a simple tracking system. It doesn't need to be elegant, it needs to be consistent. Once a week at minimum, you should know 4 things: your total income for the month, your total expenses, your current net worth, and your trajectory. Are you ahead or behind your annual target? Net worth is the most important number most people never calculate. It is the sum of everything you own minus everything you owe. Your bank accounts, your investments, your property equity, minus your debts. This single number tells you where you actually are, not where you feel like you are, where you are. When you track net worth monthly, you witness your own progress in real time. A month where your income felt tight, but your investments gained. Your net worth still moved. That visibility changes how you feel about discipline. Delayed gratification stops feeling like deprivation. It starts feeling like construction. Forecasting matters too. If you know your current trajectory, you can project where you'll be in 12 months, in 5 years. That projection becomes a quiet source of motivation, not excitement, confidence. The calm kind, the kind that comes from knowing where you're headed. Measure everything, not obsessively, methodically. The builder who doesn't check the blueprint eventually drifts off course. Discipline is a limited resource. Every decision you force yourself to make manually is a decision that depends on your energy level, your mood, your willpower on a given day. Some days all of that is high. Most days it isn't. And the wealth-building process should not depend on your best days. This is why automation is the most underrated wealth strategy available. When your investment contributions move automatically on a set date every month from your income, they happen regardless of what else is happening in your life, regardless of whether the market looks good or bad, regardless of whether you feel motivated. The behavior is built into the system, not into your willpower. The psychology here is powerful. Automating your investments means you remove the temptation to time the market, to spend money before it's allocated, to make emotional decisions during volatile periods. You decided once, calmly, what you're doing. And now the system executes that decision for you, repeatedly, without asking for your energy. Automation also applies to your savings. Set up a separate account for your emergency fund. Set up automatic transfers the moment income arrives. Pay yourself first, not as a motivational phrase, but as a structural rule. What gets allocated before you have access to it stays allocated. Consistency beats intensity every time. The person investing a modest amount every single month for 20 years will almost always outperform the person who invests aggressively for 2 years and then stops. The market rewards patience. Systems create patience. Build the system. A high-yield savings account is where your emergency fund lives. It earns meaningfully more than a standard savings account, and it stays liquid. Think of it as your financial defense, not where you grow wealth, but where you protect stability. When you have this, you are not one emergency away from chaos. Stocks, as mentioned, are your long-term offensive tool. Index funds and ETFs in a tax-advantaged account, an IRA, a 401k, a Roth, grow quietly over decades. The tax advantages compound on top of the investment returns. You are not trying to get rich quickly through the market. You are letting time and compounding do what they do. Get out of the way and let them work. Real estate gives you something stocks don't: control. You can improve the asset. You can manage expenses. You can add value. The house hacking strategy is a legitimate starting point for people who aren't yet sitting on large capital reserves. Buy something modest, live in it, rent part of it, use the experience to learn the fundamentals before you scale. Content creation is a long-term asset most people underestimate because the returns are slow at first. But a YouTube channel, a newsletter, a podcast, built around genuine knowledge and consistent value, eventually pays while you sleep. The asset compounds. A video you made 3 years ago can bring in income today. An audience built on trust doesn't disappear. This takes years. It is worth years. Building a product, software, a course, a service, a physical good that solves a real problem is the highest ceiling of all of these. The leverage is profound. You build it once, it serves thousands. Your income becomes disconnected from your hours in a way that employment simply cannot match. Build it quietly. Don't announce it until it exists. Let the quality of the thing speak first. There will always be people who are louder than you. People who announce the deals they're working on before they close, who share their net worth updates before the work is real, who perform ambition rather than execute it. And the world will validate them for a while. Likes, comments, attention. Let them have it. You are doing something different. You are building something that doesn't need an audience to grow, something that doesn't require validation to stay on course. You are operating in the space where most serious wealth is actually constructed, quietly, systematically, without the noise. There is a profound calm that comes from this kind of work. Not the excitement of attention, something steadier than that. The satisfaction of watching your numbers move, of knowing your systems are running, of understanding in your own private accounting exactly where you stand and exactly where you're going. The world will see it eventually, not because you announced it, because it will be undeniable. Build quietly, measure carefully, and move with intention. That is the work.